Hello everyone. In this class I am going to solve one more problem of cost sheet. Let's see the problem. See here, the modern manufacturing company submits the following information for the year ended. See the details. Sales for the year rupees 2,75,000 and inventories at the beginning means stock. Finished goods 7,000 and work in progress 4,000. Here opening stock of work in progress we have to add to the factory expenses, and finished goods we have to add to the cost of production. Next one, purchase of materials, that is rupees 1,10,000. Next, materials inventory means this is the opening and closing stock of inventory, that is rupees 3,000 and 4,000. Next one is direct labor, that is rupees 65,000. Next one, factory overheads, that is 60% of direct labor. Here they have not given the information about factory expenses, means like factory lighting or factory supervisor salary, like that. Here they mention the factory overheads on percentage basis. Here they mentioned that factory overheads, they are 60% of direct labor. Here direct labor how much? That is rupees 65,000 of 60% means 65,000 into 60%, that is equals to rupees 39,000 is our factory overheads. And after that, sale of scrap, that is rupees 250 after closing work in progress. Here sale of scrap, it means what? See here, sale of scrap rupees 250 after closing work in progress. Sale of scrap, it refers to the revenue generated from selling the leftover materials. Revenue generated from selling the leftover materials, waste or byproducts that are produced during the manufacturing or production process and are not usable in the main production. Clear? So these materials still have some resale value and are sold to recover the cost. So that is called as sale of scrap. So it refers to the revenue generated from selling the leftover materials. Selling the leftover materials, waste or byproducts, means this scrap the company it will not use in the main production. Clear? See, for example, a furniture factory may have some leftover wood pieces after making tables and chairs. So these wood scraps, it can be sold to another company or they can use for recycling. So the money earned from this is called as sale of scrap. Now what is the treatment of this sale of scrap in the cost sheet? Here they clearly mentioned that sale of scrap rupees 250 after closing work in progress, means after closing work in progress, it comes in factory overheads, right? Work in progress. So here after closing work in progress, we need to deduct rupees 250, that is sale of scrap, means it reduces the factory cost. It reduces the factory cost. Clear? So next, see, inventories at the end of the year, work in progress rupees 6,000 and finished goods, that is rupees 8,000. Now other expenses for the year. Selling expenses 10% of sales. Selling expenses 10% of sales. Here also selling expenses, that is given on the percentage basis. Our sales is how much? That is rupees 2,75,000 into 10%. Next one, administrative expenses 5% of sales. Here administrative expenses is 5% of sales, means our sales is 2,75,000 into 5%, that is equals to our administrative expenses. So prepare a statement of cost. Let's solve the problem. Here cost sheet for the year ended. So in the cost sheet, first what we have to find out? First we have to find out the prime cost, and after that we have to find out factory cost. After that third one is cost of production, fourth one is cost of goods sold, and fifth one is cost of sales or total cost. So first we have to find out prime cost. It means what? Direct material plus direct labor plus direct expenses. Clear? See here. First we have to find out the direct materials, means material consumed for the year. Here, see here, they have given the information about opening stock of materials. Opening stock of materials, how much? That is rupees 3000. Write down opening stock of materials, that is rupees 3000. Next, add purchases of raw materials. Purchases during the year, how much? That is rupees 1,10,000. 1,10,000. Write down 1,10,000. From this, less closing stock of materials, how much? That is rupees 4,000. So our material consumed is, see here, 3,000 opening stock. For that we need to add purchases, that is rupees 1,10,000. From this we need to deduct closing stock of raw materials, that is rupees 4,000. That is equals to rupees 1,09,000. See here, rupees 1,09,000 is our material consumed. Rupees 1,09,000. Next, for direct materials we need to add direct labor, that is rupees 65,000. So our direct labor is how much? That is rupees 65,000. And next we have to add direct expenses, but in the sum they have not given any information about direct expenses. So just we need to add only direct materials and direct labor. So our prime cost is 1,09,000 plus 65,000. How much? That is rupees 1,74,000. So 1,74,000 is our prime cost. Rupees 1,74,000 is our prime cost. See here. After prime cost, what we have to find out? We have to find out factory cost. Factory cost means what? Prime cost plus factory overheads. We know prime cost, right? That is rupees 1,74,000. Now we have to find out factory overheads. See here. Factory overhead 60% of direct labor. Factory overhead 60% of direct labor. Here direct labor is how much? That is rupees 65,000. Means 65,000 into 60 divided by 100. 65,000 into 60%, that is equals to rupees 39,000. So our factory overheads how much? That is rupees 39,000. For this what we have to do? We have to add opening stock of work in progress and we need to deduct closing stock of work in progress. So what is the amount? Opening stock of work in progress is rupees 4,000. And closing stock of work in progress, see here, inventories at the end of the year, work in progress, that is rupees 6,000. So write down closing stock of work in progress 6,000, that is we need to be deducted. So after that one more adjustment is there. See here, sale of scrap rupees 250 after closing work in progress. Means here after closing work in progress we need to deduct sale of scrap. This reduces the factory cost. Clear? That is rupees 250. $39,000 plus 4,000 minus 6,000 minus 250. That is equals to rupees 36,750. 36,750. Now we have to find out the factory cost. What is the formula? Prime cost plus factory expenses or factory overheads. That is equals to factory cost. 36,750 plus 1,74,000. That is equals to rupees 2,10,750. 2,10,750. 2,10,750 is our factory cost. I hope this is clear to you all. Next, what is the third step? In the third step, we have to find out the cost of production. What is the formula? Factory cost plus administrative expenses. We know the factory cost, that is 2,10,750. That is our factory cost. Now we have to find out administrative expenses. See here, administrative expenses 5% of sales. 5% of sales. Here sales how much? That is rupees 2,75,000 is our sales. So write down 2,75,000 into 5 divided by 100. How much? 2,75,000 into 5%. That is equals to rupees 13,750. Write down here 13, or yeah, you can write down in the outer column 13,750. This is our administrative expenses. Now we add this administrative expenses to the factory cost, then we will arrive cost of production. So our cost of production is plus 2,10,750. That is rupees 2,24,500. 2,24,500. Write down our cost of production is 2,24,500. Clear? Now we have to add opening stock of finished goods to the cost of production, and we need to deduct closing stock of finished goods. Then we will arrive cost of goods sold. See here, cost of goods sold. What is our opening stock of finished goods? Our opening stock of finished goods is rupees 7,000. Write down opening stock of finished goods is rupees 7,000, and closing stock of finished goods, that is rupees 8,000. Less rupees 8,000. Now 2,24,500 is our cost of production. Add opening stock of finished goods, that is rupees 7,000, and deduct closing stock of finished goods, that is rupees 8,000. So our cost of goods sold is rupees 2,23,500. 2,23,500 is our cost of goods sold. Clear? Now what is the fourth step? That is selling and distribution expenses. Fifth step, we have to find out cost of sales or total cost. That is equals to cost of production or cost of goods sold plus selling and distribution expenses. We know the cost of goods sold. And now we have to find out selling and distribution expenses. See here, selling expenses 10% of sales. So our sales is rupees 2,75,000. So 2,75,000 into 10%, 10 divided by 100. How much? That is equals to rupees 27,500. So our cost of sales or total sales, that is equals to 2,23,500. That is our cost of goods sold, and plus selling expenses, that is equals to rupees 27,500 plus 27,500, that is equals to rupees 2,51,000. So write down cost of sales is rupees 2,51,000. Clear? See here, 2,51,000 is our cost of sales. Now at the end we have to write down the sale. Sales is that is rupees 2,75,000. Now our sales, that is rupees 2,75,000, that is more than total cost or cost of sales, that is rupees 2,51,000. It means what? It results into profit, because here sales, that is more than cost. It results into profit. So write down profit, that is our balancing figure. Clear? That is equals to sales is rupees 2,75,000 and minus total cost, that is rupees 2,51,000. So that is rupees 24,000 is our profit. That is our balancing figure. Sales minus cost 24,000. Clear? I hope this problem is clear to you all. So I will share this practical problem on my Telegram channel. If you want any notes from my previous videos, please comment. I will upload them to the Telegram channel. So the link is provided in the description box. Okay, if you have any doubts in this cost sheet, please leave a comment. Thank you.